sector saw a big change coming in the form of taxation from the union budget, a change which was expected to negatively impact life insurers with high share of large ticket policies. Speaking exclusively to CNBC-TV18, Vibha Padalkar said a balanced product mix has helped the company navigate the disruption. Vibha also said that the current tax-free status on insurance should continue.
There was a lot said that HDFCLIFE has a 10 to 12% impact. My limited point is look at the months that we started off this year. Despite that impact, we have grown faster than the private sector as well as a lot of other companies that relatively had a so-called lesser impact. So I think all of these are just headline items.
What I particularly want to understand is that as far as long-term savings is concerned, more than 5 lakhs, and you have a very successful flagship product there, Jeevan Sanchay. What I want to understand is that what kind of change did you see between March and let's say April and May when it comes to long-term savings or this particular product segment in terms of the traction?
So I want to say that overall non-par long-term savings for April and May has grown. Okay, so it's a myth that it has not grown. But above 5 lakhs has shown a degrowth, which was expected.
It's fair to say, looking at the numbers, so far so good. But with that statement, what also comes is that right now you have about 7.5 lakh of premium contribution which does not get taxed. 5 lakh on the saving side and about 2.5 lakhs on the ULIP side. Do you see a genuine risk of this amount also coming under taxation at some point from the government side? And if that happens, then does it start increasing the risk for insurance companies' portfolio?
So, a couple of points here again. One is that worldwide, people need a nudge to buy insurance because people intrinsically don't want to talk about risks. And so it's a little bit of sweetener. So it's not an India-specific thing about giving some level of taxation, right? So I would hope that we continue because this is human behavior and like I said, not India specific.
We continue with the 7.5.
That we continue with the 7.5 lakhs. In fact, my ask would be why not collapse the 7.5 lakhs? Why should we micromanage the prospective customer that you can only buy in this pot versus that pot? Why not he or she buy everything ULIP if they want to, or everything as participating, or everything non-par, or some hybrid between these, right?
Within the limit of 7.5.
Within the limit of 7.5. That would be my appeal to the government.
What is the current gross surrender value that you have out of the total premium, let's say between the 7th and the 12th year that you get?
More than specifics of what do we have, it's whatever is as per regulations, and you have to comply with it. It's a slab base and you have to comply with the regulations. And I am aware of where you're coming from. I want to make a few points here. Number one is that no discussion has been had with our regulator on this. Number two is that what is important is that the pricing and the actuarial assumptions are in cohesion with what you're actually experiencing. So if one is having say a persistency, a 13-month persistency in a guaranteed product of 90%, but one is pricing in and showing new business margins as if your persistency is going to be 85% because you're expecting 5% to surrender, then there is a disconnect between the two.
There are discussions on reducing the surrender charges. I think it's about 30% minus the first year premium that the customer receives. If to what the conversations are at the regulatory front to increase that 30% in terms of surrender value, you think that it should not be done and the current structure that we have with respect to 30% should be maintained because of the aspects that you mentioned?
Yes, and before we get to the answer as to should we or should we not, it is important to see versus actuarial assumptions what are companies trending at. That is baby step number one, and we would wholeheartedly welcome disclosure on that front in terms of sensitivities. Then we can see whether there's a problem that needs to be fixed or it doesn't need to be fixed.
Okay, well, driving up all the insurance stocks today, that's HDFCLIFE stock up around 5.5%. That's all the time.